the mixed signals that we are getting, and the disinflation story seems to continue. Economic data remains weak, and this comes in the broader context of what is happening in the global market. So, what kind of impact do you foresee from the most recent developments in China? Also, from a point of view of pullback, further pullback of foreign investors.
Right. So when we look at China, we have to look at it from two perspectives. One is the equity market perspective, and secondly, the economic perspective. Now, what has happened in China over the last, say, few weeks or so, the markets have rallied by as much as 25 to 30%. It's been a very, very sharp rally in actually still the largest equity market, in the emerging markets. And that has clearly had an impact on the foreign investor sentiments in the sense that there has been a widening gap in valuations between India and China, and there has been certain section of investors that have moved very quickly to take advantage of this valuation gap in light of what was announced in China recently. But having said that, our house view is that at this point in time, the stimulus numbers, the package, etc., that has been announced in China is still of a very small value from an overall perspective. The market expectation is anywhere between 2 to 5 trillion RMB, worth of stimulus. So 2 trillion on the lower side, 5 on the higher side. So those are the numbers that are kind of expected. But what has been delivered so far is probably just a very small fraction of those expectations. Uh, but but even that alone has driven the Chinese markets up so much and has had some negative impact in terms of the foreigners pulling money out of India goes. My sense is that there will always be some part of the investment community that would like to exploit such short-term moves. But my sense is that India continues to be a long-term structural story, and a story that is much more predictable, both in terms of corporate earnings and in terms of government policies. So my sense is that there has been some small pullout from the foreign investors from the Indian markets, but the good part obviously is that we have a larger stabilizing force or a stabilizing factor in India, which is in the form of very, very strong domestic flows. And we continue to see close to $5.5 to $6 billion worth of money coming into the markets every month from equity mutual funds, and maybe another couple of $1 billion from other domestic sources. So that is clearly being the big support to the markets at this point in time.